Hello traders, this is Michael Huddleston with the Pro Traders Club entry for June 5th, 2011. Alright guys, we are looking at the fiber and we're going to go over a couple things this week, and I appreciate your patience the last few weeks. Number one, I did have some personal things I had to take care of outside of the realm of trading. Two, there is a position trade we're going to cover, and as you know, I do not like to talk about the positions while I'm in it. It's just a weakness on my part, and it just allows me to keep from getting married to the vein. So with that, let's get into it. The last Pro Traders Club entry was on the 23rd of May, and if you look at the time frame in here and look at the video that was posted, time date stamped, it's not hindsight, it's all, going forward. We were talking about the fiber being under accumulation, and there was buying taking place in here, and we're going to go over how a position trade or swing trade that unfolded in a fiber produced over 600 pips since the 25th. Okay, so we are going to look at this low here and this high here. You see that swing price down here? You have a high, you swung down in here. Now I have this level here delineating the figure, the 140 figure on the fiber. If you refer to your support and resistance video segment, there is a mentioning of how the importance of having large round numbers. Banks and institutions like to do large sums of flows in and at around these price levels, and since we had traded down precipitously from the highs up here at 148.95, 149 area, it was reasonable to expect a bounce in this area here. Not that that was expected alone. I mean, there was other tools in here that we'll go over that was mentioned even on the Pro Traders Club on the 23rd installment. But let's zoom in a little bit and take a closer look. Okay, here's the 23rd. We were doing some trading in here. Now, I realize there's a lot of folks out there that, and generally it's the folks that are not in the business of technical analysis that long. They subscribe to what most people write in their books, and being an author and a good trader is a rare thing. And I'm not saying I am, because I'm not an author, but most folks will say that you can't pick tops, you can't pick bottoms and all that. And hopefully you can see that I'm illustrating in advance how it's done. You can do the same thing if you just follow the tools and exercise some patience. But there's one caveat to that. It's easy to pick a bottom or a low when you have the directional premise understood. Okay, so it was easy to assume we were going to expect a bounce here at the 140 level. Technically speaking, you can see several, or at least you should be able to see several optimal trade entries in the price swing that ensued from this low here to present price levels now. Okay, here is one that should be jumping off the page at you. Okay, here is one here. Okay, and this in fact is the one that we are going to refer to for this Pro Traders Club. Alright, we have a bounce at the figure, and now I realize it swung just a little bit below the figure, but remember, in our analysis teachings, the full figure and key support resistance levels, you have to be a little bit flexible. They're not always going to stop right on the round number. It just draws your attention to that price level for a high probability of a bounce. Okay, now with that understood, okay, we did see a bounce up in here, and obviously looking at the Pro Traders Club from the 23rd, you can see that we were day trading in here looking for a buy. Okay, so we nailed down the actual low day, okay, which is impressive, even for someone that's been doing it as long as I have. I always I'm tickled to death sometimes when how these things, you know, line up so you know, quote unquote perfectly. Perfection doesn't exist in trading, but you know, this is as close as it gets to it. So guys, you know, fasten your seatbelts if you've never seen this before, because this is really neat. So we nailed down the low here. Okay, and we're going to come back to how we knew this was a low a little bit later on, but for now, here's the bounce we look for. Okay, and then it traded back down, almost retested the 140 figure. Okay, but here is your 62% retracement and your 79% retracement level. Your optimal trade entry region is right in that area here. Notice how it went right to the midpoint. Okay, again, how many times do you see this pattern unfolding? It's always there. It's always there. This is your sweet spot. Okay, now sometimes it'll dip down to 79, maybe just a hair below it. Okay, but when you trade this pattern, you're not just buying it here and putting 10 pips below that. You're risking 10 pips below the low you swung the price swing from. In other words, we're looking for a buy, so you take the low to the most recent reaction high. As it tries to retest this low, the risk is assumed by 10 pips below here. Okay, now if it's a larger term swing trade, and your money management permits this, you can risk 30 pips either from the point you try to get in at below here, but it has to be in agreement with at least 10 pips below this low, or if you're ultra fearful of not executing the entry properly, or you just want to be in it and know that, you know, if it's going to go up, you're going to be in it no matter what static you get caught in, you can just do 30 pips below this low and just obviously, you know, gear down your leverage to accommodate that, you know, risking no more than 2%. But obviously if you're new and in trading, risking 1/2 of 1%, no more than 1%, even on a demo account. While you do not feel the strain and emotional tug on the real money factor when you're trading, it just gets you in the habit of risking less and you know, experiencing growth exponentially by having consistency. Okay, so enough of that rant. Okay, so buying in here. Okay, excuse me. 140.20 was my fill. Okay, and in here, optimal trade entry was executed. Now, since I assumed this was going to be a price swing on the longer term, okay, I took out first profit here, 30% at the old high here. 70%, okay, stayed on. I took off another 30% at this high here. Okay, now hopefully you've been watching these tutorials long enough to understand why I'm using these price swings, because each price swing in price, there is a anchor or a reference point. It's well, for lack of a better word, anchor to really. If you look at the low here, so this price swing down, well, if price goes up, the most recent intermediate term swing is this one here. So we want to see or measure what price may do if and when we get up to this point here. When we're buying down here, this is a near-term resistance level. Okay, so we would look to try to get some profits in here. So price blew out any stops that were resting above that here. Traded back down, swept just below it a little bit, but just to get down to this high here. Okay, so at this point, 60% of the trade was taken off, 40% remaining. Now, if you look at your extensions here, 162, see how this price level was calling for this price region here. Now go to the left of your chart. What happens to be in that same general area? See these old highs in here? So that's how you want to look for nesting opportunities to scale out. Okay, 20% was taken off here at the 162% extension, and ultimately 146.30, okay, was an exit. Now how did I get to that price level? Well, let's zoom out just a little bit. See this high here? See this low here? See this high here? All I did, okay, was take the approximate high here, which is 146.46 area. This low here, 146.27, and on this low right here, okay, 146.32. To me, the price, and just using our small numbers as an objective of exiting trades, 146.30 was a reasonable objective for me to get out at a round number. And let's go back to a 5-minute chart, and you can see how price really had some stalling at that point at 146.30. Okay, so overall it was a 600 pip swing in price, and this this trade alone was one of the largest contributing factors to my monthly haul in terms of pips. So if you look at the price low here that was made on non-farm payroll, this was tricky for me, and this is another reason why I like to scale out a lot, because if I'm going into a report day like this and I do have a position on, you can see how price ran up and consolidated sideways essentially. Okay, let's take this off. Let's go back to a split screen real quick. We will look at a 5-minute chart on the fiber and the cable. Okay, all right, here's non-farm payroll on the cable. Price came down, bounced up off S1, back down to S1 again, trading at its figure 163. Price on the fiber went lower, okay, trading at, look at the 1150 and 12. This is basically the same lows here. Fiber was able to go lower, cable was not. On non-farm payroll, even our tools, and I don't trade non-farm payroll, but I wasn't in trade, you can see how price exploded. And actually, if you look at the cable, you can see an optimal trade entry for New York Open when non-farm payroll came out. Went down, optimal trade entry in here, got real close to the low here, but still, if you were going to trade the non-farm payroll day, 10 pips below that, you still would have been in the trade. Keyed right off of its 163 figure. Extrapolated move to the upside. Let's take a look real quick and take the high, draw it down from this intraday high on the cable down to the low, and you'll see the extension. $162 in here. Let's drill out just a little bit more. Okay, this price swing here down to this one, 162 extension right here, nailing the high of the day on non-farm payroll. 164.35, which essentially blows out any stops above this high here and this high in here. So you can see how this was the last little ramp up from my trade from trading the fiber on a position swing trade. And this is how it unfolded, guys. So with that, I wish you good luck and good trading.